Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, February 27th, the year 2018. To trade or not to trade? Someone asked me to talk about overtrading. I'm sure if you've read any of the traditional trading education stuff out there on the internet, or in, books, and they talk about overtrading. But, before you can talk about something, you really have to define what it is. So, we've got trading and we've got overtrading. So when you think about it, what is trading? Well, it's buying and selling, right? But that's not quite it. It's waiting, then you buy. It's waiting, then you sell, and then there's more waiting. So waiting is part of trading. Usually the only time that's considered is the time between the order entry and the order exit. So it's enter, wait, exit. But you see, there's all that time where you wait to enter again. So what is overtrading? Well, I would say overtrading comes in a couple of different types or flavors. If you have a trading plan, a method, a system, and you take every signal, that's pretty much what you're supposed to do. Could that be considered overtrading? Depends on the method or your plan. If you've got 5 different methods that, you're constantly getting alerts, yeah, that's probably pushing it. Another way of overtrading would be just jumping into trades willy-nilly. No set plan, just kind of seat of the pants, airballing it, as we used to say. Shout out to Ben, aka Airball. So that would be another overtrading. Possibly trading too many instruments at once could be considered overtrading. Like maybe you're trading 17 Forex pairs or 27 stocks at the same time, or, dozens of options or futures. That could be considered overtrading. So really is what the question you really want to answer is, to trade or not to trade. Which is basically learning to be patient, like the big jungle cats, waiting for that opportunity, and then when you see that opportunity, you spring into action and you make the kill. So that being said, let's move on here. Money and risk management. If you overtrade, you might bump up against this, where you might be risking too much. So you might be considered overtrading if you've got so many trades on it past your risk management tolerance. Okay, we'll look at the weekly chart here. And I think if I remember correctly, yesterday it was almost a doji. As you can see, it's come back down. And the gaps have filled. And you can see here movement from the weekly open. A nice 62 pip bottom there. CAD's up 113. So you can see those who trade the weekly open cross paid off nicely. I'm getting over a cold. That's why my voice sounds a little stopped up there. Anyway, we look at the daily, just looking at the highs and lows in the open. You can see here that this daily candle broke the previous day's low. And there was, between here and here is about 17 pips or so. I know, let's see, somebody says I can just go like this and look at how many pips there are. Actually, no, it's not 17. My mistake. It's more like 73. You can't really subtract these numbers in this particular case. In fact, you need to add them because it's between the two. So there was a nice trade to the south side. And here we go, looking at the buy zone. You can see here in that first few hours, looks like you might have gotten your fingers burned slightly if you took those trades, but waiting, past that New Zealand Australian Open well into the Asian session, there was a nice break to the upside. Then you see here you had some downside action coming back, just barely touching the zone, and then you can see the action to the downside paid off. Rat zone right here, there really wasn't much of a rat zone at this particular time, but as you can see here, there was a nice rebound out of this rat zone the past couple of hours. And the pivots, you can see here we had the open, we had the pivot, took out the pivot, came back through and reversed. So those who faded the pivot once again paid off. Let's see, 63 to 87, 24 pips. Not bad for a day's trade. And looking at price action, once again, simple price action. Trading with the H1 candle color at the line. And you can see here we've got the 3-level ZZ semaphore. So it'd be, oh, that's right. I forgot I haven't been doing this. So I guess I was away for a couple weeks because my computer's down. I'm going to have to buy a new one. I just saw one of my credit cards will give me 5 times points purchases next month. So I guess I'll pick one up in the next couple of days. So, anybody have any suggestions for a laptop? I'm thinking I'm going to go with a solid state drive, at least an i5 core processor. Anybody have any suggestions? Shoot them my way. Hit me with an email. Let me know what you think's a good computer. Okay, so you can see here 3-level ZZ semaphore that I modified. So you see the 1 ball or 2 ball or 3 ball. It's kind of simple. After you see that ball, then you want to trade with the candle color at the line, going away from the ball. So you see here, there was a trade right here. Now we've got a 1 ball on the bottom, so now you take the green. We got a 2 ball on the top, so now you take the red at the line. Or if you don't even use the 3-level ZZ, once again, trading with candle color at the line. Right here, you see you could have popped it for 10 pips. Coming here, another 10, and so on. Very simple trading with H1 candle color at the line. Simple price action. And if we look at the 5 lines from yesterday, the high, the mid, the open, the close, and the low, once again, trading with the H1 candle color pays off. And you can look at the daily open crossover trade, and you can see here, wow, for some strange reason, the dollar yen's hidden. I'll have to adjust my screen. It's a different computer, so resolution. I thought I had them both the same. And then looking at the wick zones, as you can see, we pretty much had a doji yesterday. So there's not much of a distance between the two. But as always, price doesn't like to stay in the wick zone. It came out, and those who trade the wick zone had a profitable trade. And ditto for the holo zone. Here's the H1. You see here, price dipped in, came back out. And then right here, we've got price dipped in, came back out. So as you can see, once again, you can take pips using the H1 on the wick or on the holo. Squigglies, I don't even feel like it today again. And once again, looking at the tick chart, the real chart, you can see here how when price breaks the peak or the valley, what happens? So you see here, as price is going up, here we've got the bid making new highs, and when the ask crosses below, you can see, and we've got the valley here coming down as such, and you look for the bid to go up, barely went through it, and you can see here you would have had to escape with just about nothing. But that's trading the true price action of the market. People say this is noise, but that's the noise is what makes the market. So, to trade or not to trade? That is the question, right? So, you have to determine what your method is, your plan, and you stick to it. And if you stick to it, you stick to your plan, start out with one pair. If you're successful, maybe you can juggle two, and maybe you can juggle three. That's up to you to decide, nobody else. But you'll know if you're over trading. So I think that answer really has to be up to the individual trader. Are you sticking to your plan? If not, then you're probably over trading. On the other hand, if you're not sticking to the plan and you're not trading at all, then you're under trading. I guess fear has you. You're afraid you're going to lose or something. So don't be afraid. You know, if you are, just trade a dime a pip till you, or a penny a pip till you get some confidence. And then you move up. So, fellow traders, just remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to, I got to do some other things today, so I won't probably be draining the banks. But you guys drain the banks for me.